morning, guys. Welcome back to the channel. I made some purchases last night. I got my morning coffee. Let's get straight into it, guys. Got a cool video coming up, so stick around. Good morning, guys. Welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Now, a huge milestone for me, guys, and I'll get into this quickly. You can see there, I've just hit 400 subscribers. Thank you to all of you guys who have liked the channels and videos and blah, blah, blah. I thank you very much, guys, because without you guys, I wouldn't have had this channel, and I really enjoy building dividend wealth with you guys. So thank you very much. That is incredible, guys. 400 subscribers. Thank you from the bottom of my heart. I really appreciate it. If you're new, guys, make sure you like the video and subscribe to the channel. And also, guys, if you're new to Stake, use the referral code below, because you will get a free stock in Dropbox, GoPro, or Nike. And I tell you, as I mentioned yesterday, I'm very close to a stock in Nike. So moving on, my video today, guys, is going to be essentially what you would need to, for example, work out your retirement. So like, for example, if you want 60 or 80 or $100,000 into a particular company or ETF, how much you're going to actually need to retire with that ETF or stock. So on the day, I'm sitting at $19,976.66. That is incredible, guys. I started with $300 in this portfolio, so it's increased dramatically, guys. So I'm really happy about that. Very consistent. That's what the key is, guys, consistency. And also, before I start, guys, just remember that I'm not a financial advisor. I do this for fun and obviously to show you guys what I'm doing in my dividend portfolio. So make sure you guys do your research. I have to put that little disclaimer in, guys, just to make sure that you guys are comfortable doing your own thing here, guys. So anyway, so essentially I'm up $5.91 on the day. It's not much. I did deposit some money last night into my stake, and I'll get into that in a second. I'm up $4,679 USD across my entire portfolio. That's a 30% return. That's because of those major downturns last year in 2020. I invested throughout that whole year, so that's the reason why I've got those returns. So I hope you guys did as well. So mainly a mixed bag again across my portfolio, guys. It is what it is. I'm not worried about the ups and downs. I'm more or less worried about the dividends. So I deposited $250 the other day. That got me $188.55 in USD, but I had some dividends in there as well. So I think it was about $5.68, guys. So I had a total of $194, and you can see here I purchased more EPD, Enterprise Products Partners, and there's a reason why. Is because A, they're increasing their dividends for many years, guys. They're investing in renewable energies, and not only that, guys, they're mainly in gas. They're not so much in oil, but they're mainly gas and energy, so in electricity, sorry, as well. So EPD, guys, for me is a really good energy company, guys. Energy sector has seen some incredible returns in 2021, just with the whole economy around the world opening up and the vaccine going out and so forth. So obviously I purchased 8 shares of EPD last night for $194. Now that is at $22.89 on the day. I'm sitting at $28 and $28 shares of EPD. There you go, guys. It's still early morning. I'm going to have a sip of coffee. I've had a 1% return of $10. I only started investing in this company this year. It's got an 8% dividend yield. Now, what I'm wanting to get at in this video, guys, and I'll do the maths quickly for you, is in order to calculate how much you're going to require to retire on a particular stock or in your portfolio, for example, let's use EPD as an example, right? And this is how you calculate it. So you've got an 8% dividend yield. And what you guys need to work out for yourselves is basically how much do you want per year in dividends coming out of like a stock portfolio like this, for example. For me, ideally it would be $60,000 or $70,000. So let's start, for example, and I've got my trusty calculator here, guys. It's virtually falling apart, but anyway, so I'm going to start with $60,000. Can you guys see that? There you go. So what I'm going to do is I'm going to divide that by the dividend yield of 8%. So what you want to do is you want to move the decimal place over. So you go 0.08. So you're dividing that by 0.08. There you go. That's 8% dividend yield. Equals $750,000 invested right there. Can you see that? That's basically what is going to require. That it's going to require for me to retire for $60,000 a year coming in from EPD. Now, Let's have a look at some other companies here, guys, because these ETFs and index funds are also interesting as well, guys. If we look at VYM, for example, right, $99.72 a share. I'm sitting at 14 shares of that, and it's got a 3% dividend yield. This is significantly lower from EPD, guys. So let's have a look at this, right? So say, for example, I want $60,000 divided by 0.08, if it wants to work. No, wrong one. Sorry, guys. Hang on. 60,000 divided by 0.03. There you go. Sorry, I confused with EPD, so I had 0.8% dividend yield on my mind. You're going to need $2 million to get, see that? You're going to need $2 million to get $60,000 a year out of VYM. So this is a significant investment as opposed to EPD with the higher dividend yield against the lower dividend yield. And obviously a common one everyone's investing in is VOO. This is a really expensive stock, guys. It's $362.07. Let's have a look at their dividend yield, guys. So I've got 0.69 shares of this, so I'm sitting at $252 in equity, $48 return, which is really good, 23%. That's obviously because of 2020, but they've got a 1.48% dividend yield. So let's have a look at this. If I go 60,000 divided by 0.0148, wow, that is a significant one. Check that out. 4,054,000. That is a lot of money to retire on VOO. This is the S&P 500 index fund. I guess what I'm trying to get at, guys, is in order to calculate what you are going to need in the future and set yourself a goal to retire on dividend income, you need to work out where your companies are and what dividend yields are most important to you guys in order to achieve that retirement. So I mean, the higher the dividend yield, the easier it is going to be to save that kind of money. I mean, saving $750,000 is a lot, but it is achievable if you put your mind to it. You can do it relatively quickly, rather than, you know, stressing about it. Put your mind to it and set a goal for yourself. I mean, let's look at another one, for example, right? SPHD is a monthly dividend payer, and I was curious because I wanted to do this one as well, guys. So check this out. Let's go to SPHD. I'm sitting at 53 shares of that, $42.43. That has gone up in value, guys. So let's have a look here. I've got 4.26%. So if I go $60,000 divided by 0.4, sorry, no, stuff that up, 0.0426. Okay, so I'm going to require $1.4 million to get $60,000 a year from SPHD, guys. So that's that SPHD there. So it is a significant investment, guys, but that does pay monthly, so bear that in mind, guys. So that is a significant investment, but it can happen. This is what I'm trying to say, guys. So work out the goal that you have for your dividends, whether it be, you know, 10,000, 20,000, or whatever it is. So I mean, basically, if I was to get 10,000, let's try this for example, right? I'm going to scroll back down to SPHD because 10,000 is a really $10,000 a year is a lot of money, guys. I mean, when you work that out, so 10,000 divide that by 52 weeks, that's nearly $200 a week. That's fantastic, guys. That would help a lot. Right, so let's go $10,000 a year, divide that by 0.0426. That's going to require an investment of $234,000. Now that is achievable in someone's life very easily. I mean, if you're young, you've got plenty of time up your sleeve, or even if you're whatever, middle age or 40 or 50, you still can get 10 to 15 years to do $234,000 in SPHD, for example, with that dividend income. So that is very achievable, guys. So just bear in mind, obviously you got to do your research and make sure you're comfortable, but that's a pretty cool, way to work out how much you're going to require an investment to retire off dividends. So now I did increase my dividend yield, guys, last night by $20. So I was sitting at, I showed you yesterday, I was about $874 thereabouts, and now I'm sitting at $895. So let's go have a look here. 895 less 874, I think. It's $21. By buying 8 shares of EPD, guys, I increased my dividends by $21 last night per year. That is awesome. Now, EPD has risen up in my top 10 dividend payers. I'm due to receive a dividend from VXUS in 2 days, 18 cents. VYM, $12.28, guys, in 2 days as well, which is the index fund. And let's have a look at my top payers here. XOM $270 a year, SPHD $120, Prospect Capital $97. That one may go, I'm not sure yet. EPD guys now $65.80 a year. That is unreal. O Realty $64, VYM $49, AT&T $37, and AGNC $23. And 30% of my goal has been reached. This will fluctuate throughout the week, obviously with stock prices going up and down. Some companies reduce their dividends, some don't. And 30% of my dividends are from energy and minerals companies. So that's pretty cool, guys. And let's have a look at my portfolio, $25,840. And monthly income, guys, has gone up between those months, as I mentioned yesterday, between April and May. These are the lower months that I'm looking at here. So if I was to go to April, where is, let's try and find EPD, guys. Let's have a look here. I think that's in April, actually. Where are you? Prospect. No, that's SPHD. Oh, okay. Gotta find it, guys. Gotta find it. Where are you? I think it may have been in March, actually. Let's have a look. Pepsi. I will find it. It's taking its time. 2021 April. Must be here. Yeah, man. See what happens when ticker symbols are really small, guys. Anyway, I can't find it. Anyway, so I have increased my dividends, guys. I will find EPD eventually, guys, but it's buried amongst all of these companies that I own. But anyway, $895 a year. Really cool, guys. And obviously with these dividends, you're also getting the benefit of compounding of the stock price, as well as compounding when you reinvest those dividends as well. So not only is your stock price going to increase in value over time, you're going to get the dividends reinvested as well, which is going to increase your position in the companies, which is going to then increase your dividend portfolio. So you can see how important dividend investing is, guys, for that compounding and growth in your portfolio. Really cool stuff, guys. Really happy with my progress, and I hope you guys are doing well in your portfolios as well. But yeah, this is just a video just to see how to calculate the dividends what you want to retire on eventually, or live off your dividends, how much it's going to actually take to retire on these dividends, guys. So make sure you do the calculation. If you've got the dividend yield of 4%, move the decimal over 2 places there. So it's 4%, so it'll be 0.004, which will give you the amount of money that you need to retire on or live off, basically, to get that amount of money. So if it's $10,000, $20,000, $30,000, $40,000, $50,000, $60,000, even $100,000, you're going to know how much it's going to take for you to retire on those funds, guys. So thanks very much for sticking around. I hope you guys are going well with your portfolios. Leave your comments below what you think about any other stocks or any other companies that you guys want to invest in. And make sure, if you are new, like the video and subscribe to the channel. And I hope you have a good day, guys. Stay safe, happy investing. Peace. Bye.